Good afternoon, everyone. It's 10 past 3 here in the UK. I think that would be about 10 past 10 American Eastern Time. It's Tuesday, the 29th of September. The American market is running now for 42 minutes. And as you can see, things have changed after a very good day on Monday, the 28th. The advances and the declines pretty much the same, and we've got a green light on the front page of VectorVest. Now that green light can change, but what cannot change is that the primary wave turned to up after trading yesterday. So the first measure of a trend reversal on VectorVest has taken place. It's still a very noisy signal, and certainly if that green light can be maintained where the composite is up day over day and week over week, that would add greatly to that signal. So as we go into the trading day, just one measure of the 6 VectorVest signals that I talk about has turned up. Alright, so still very, very early days, and just remember those big hitter signals, the DEW and the confirmed calls, are still down, so we're a long way from being out of the woods here. So if we look at the VectorVest market timing chart, there's the market timing chart. I've got the DEW layout, and as you can see, the market found support. Let's go to a 6-month view at that old high, and it came back on 3 waves. And if I put on the DEW signals, which have been very good, that's where I started this campaign away back in April. That was an outstandingly profitable period, and now the DEW signal is still down. So a DEW signal up would be a great confirmation that we're on our way back up again, but a lot of headwinds before that happens. So let me just have a look at go back and what I've been looking at myself. The S&P is up 4 ticks after a really big day yesterday. That's very good indeed. So we pull up the S&P. There we are. And as you can see, it's in bars because I look at it and trade it myself. Let me get rid of all the stuff for you. First thing is that this pullback, and I drew this last weekend, I won't put it on again, but that was a 62% retracement between the low in June and this high that we made at the start of September, on the 2nd of September. It's pulled back in 3 waves, always quite positive, but when I was schooled in this so many years ago, the old traders talked and loved what's called island reversals, and this is an island reversal where you see there's a gap down and a gap up. That's the most positive thing that I can see on that chart. Now, folks, this thing pulled back in what traders would call an AB equals CD wave, but the really important part is these closes. So that's the highest close, and for this low to be really confirmed, a close above, I think that close is 3405. A close above 3405 would be really important indeed. So as we go into the trading day, just one measure of the trend on VectorVest is turned up. Nevertheless, I have taken some positions. And just remember that this is not for everybody. As they say in the TV shows, don't do this at home. So that's what I've looked at. Now on Monday afternoon at our VectorVest Q&A here in the UK, I told everybody that if gravity didn't move up, I would eat every book on technical analysis I had, and I'm glad to say that I don't have to do that anymore. This was a share that's got impeccable VectorVest credentials. It's a small cap and tiny by American standards, but it's trading at 147. VectorVest believes it's worth 207. The RV is 1.57. The RS is 1.31. Growth 26%. CI 1.57. So outstanding VectorVest fundamentals. And it is a classic example of what you can do with a little bit of price and volume analysis. So if I put on the volume here, This is just classic. If I was, in fact, I'd be doing a short-term trading course relatively soon here in the UK, and I'll have this in as an example. This market pulled back. This is what I call a spring, but then it bounded up on big volume, and then bounded up in big volume, and then it goes sideways on hardly any volume. And I said to everybody on Monday afternoon, as I say, if that doesn't go up, I'll eat all my book on technical analysis. And it for once in its life, it did what it was told, and it moved up. So I bought a little bit of it yesterday afternoon, and my stop was already at entry. I don't know what's going to happen. As I say, that 3405 level on the S&P is absolutely critical, folks. A close above that, and I think even by that stage the DEW will probably have turned up, and I think that we can be an awful lot more aggressive in the market. But nevertheless, gravity going well, and that was as close to a sitter as I've had in a very long time. Let's look at the rest of them. These are all small positions, and I'm reasonably happy with them. This is AMD. Now, those of you that know me as well will know that I sat in the AMD down here, and that was probably the best trade of this year, because when it went, it just flew up the page. Now, AMD has pulled back, and as you can see, it pulled back and took out this low. It's not a classic spring because it made a new high. It's a bit of what Mr. Wyckoff would have called, in his own words, an agricultural spring. This came down, took out these levels, and then has reversed. Now, the eagle-eyed, again, if you do my bit of the precision swing trading course or my own swing trading course, I love my falling wedges, and there was a falling wedge like this down here, and that again, a chair in a very strong trend and a falling wedge invariably means that the trend is going to go. Now, I got into this yesterday afternoon, just about in here somewhere just before the close, and it's going the right way. That's all I can say. I'll do my best. My stop at the minute is under this low, and I'll do my best to get that stop into the 2-day low at least before the end of play today. I have a behavioral finance problem. I think many people have the same problem, in that if I've made really good money in a share, I tend to be attracted to it again. I know it's wrong, but I am aware of it. Nevertheless, it's what in fact got me looking at AMD yesterday, and we shall see what happens. But markets tend to move out of falling wedges very quickly indeed, and also all of these people that were long here would have had their stop underneath that low. Those people are all now roadkill. Markets don't like people getting rich who shouldn't be getting rich, so they tend to eliminate those people along the way. And one of my rules is that I want to put my entries where the masses put their stops, and that would have been a cracking place to put your entry down there. Got in a little bit after that. I'm not unhappy with that. I would like to see a lot of volume coming through that today. Now, I couldn't resist this on Target. And Target, this is a classic cup and handle. If I put on my 2 moving averages, people keep complaining that I don't put the moving averages in charts. That's because I've been looking at the damn things for 40 years, and I know exactly where they are. Markets tend to pull back to this 21 period moving average. And the 21's above the 55, all is good. Clearly, there was news here with this huge gap, huge volume, and then it goes sideways in this cup and handle pattern. I'll take off the averages. Another thing that I don't like is cluttered charts. And as you can see, this textbook cup and handle pattern, and I would expect that to keep going. Nobody knows what's going to happen next, folks. Only a complete idiot would say that they know what's going to happen next in this environment. But I'll do my best to get my stop in. My stop at the minute is under that 150 level, and I'll do my best to get my stop in. I'll probably pull it up to that 2-day low before the close of play today. The best trades just go. You don't have to sit and sweat in them forever. And the last one is the GDX. I spoke yesterday afternoon at the UK Q&A about the gold market, and I haven't bought any gold shares in the UK as yet, but I felt that a spread bet on the GDX was worth it. This market has pulled back, and the gold bullion market charted a bit of confirmation yesterday, so the GDX moving up a little bit. GDX is the Van Eck Gold Miners. It's an exchange traded fund of many of the big miners, and again my stop loss is still under this level, and I'll do my best to get that stop loss up as fast as possible. In this environment, ladies and gentlemen, when I've made as much as I've risked in any of these positions, then I'll take half off and get my stop loss to entry. I've already done that on Gravity. I'd never heard of Gravity until Sunday afternoon when I was doing my due diligence. Okay, so that's what I've done. They're very small positions. I will add to those positions as soon as the VectorVest signals start to come in. As I say, that's the SPX. After this big day, it's reacting very well today, but I would like to see a close above that 3405 level. If that's the case, then we stand a really good chance of moving up to these highs. Just remember, the big hitters, the DEW and the confirmed call and the underlying trend are all down, so it's not an environment for those who have a nervous disposition. Okay, so those of a nervous disposition, then simply wait for at least the DEW to turn up, or maybe the confirmed call to turn up before initiating positions again. I'm still confident that we're going to see a run into the American election, but that's just my stomach talking. I assure you that I'll be trading the market and not my intuition. I hope you found this useful, folks. If you do get into the market, just remember to size your positions correctly. Any one trade, you should lose a maximum of 1% of your equity, and no point in putting a stop loss in place if you're not going to adhere to that stop loss. Okay, so this is an environment where one moment of weakness will in fact prove very costly indeed. Key levels on the S&P: 3405 on the upside, 3200 on the downside. If you see it getting down below 3200, then simply run for cover. I hope this was okay. Thanks very much. Bye bye.